Alright everyone, welcome back to the channel for another TA episode on Bitcoin. In today's episode, the lower high, we're going to be navigating a few Bitcoin charts. We're going to be looking at the greater markets. We're going to be looking at things like the Fear and Greed Index, talking about the next countdown to the next FOMC, and talking about a few charts that I haven't mentioned in a short period of time. So let's jump right into today's video. Now, the first chart I want to start off on is this. Now, this is a chart, basically, we're going to start our focus on the all-time high for Bitcoin up here at 69,000. And right off the bat, you can see there's two vertical lines in the sand, the 4th of May and the 15th of June. These mark the two most recent FOMC meetings. Now, hence the name of this video. As you can tell, within both of these FOMC meetings, whether we bounced into the FOMC or whether we bounced after the FOMC, you can very much tell that we are in a lower low, lower high structure. But if we start off from the basis, if we start off from when we topped out at the all-time high, what did we do? We had a big capitulation back down to the downside, down to 42,000, and we subsequently moved up to 52,000. Moon Boys got out of bed, we moved up 23%, and as soon as we came into the daily EMA ribbons, slap, we got absolutely booted back down to the downside. And what do? Had another massive capitulation. Within this market structure, you will notice there was a high, lower high, lower low, lower high, lower low, and as you can see, if we highlight these past couple of moves, you can very much tell the market structure is completely unchanged despite the moves that we have been having. And I would also like to highlight the last two moves respectively have been 46% and 27.5%. Now if we zoom into what we've done in the past couple of days, you can see we are up 24%. And we're already struggling to have a continuation in momentum. You can really tell there is not a lot of volume coming up and supporting this trend. What you can see is we had, basically, if we zoom out, I guess Heikenashis would probably define this a lot better, but you can see, these nice swings up in terms of bullish volume, nice massive or bearish volume rather. We have these massive swings up in terms of bearish volume, and then we get a tiny bit of bulls stepping back into the market, and it seems to be relatively flat and stagnates before it starts to generally move back down to the downside. And we're already seeing that we've got absolutely no strength within this move, at least in my opinion. We've only been bouncing for 2 days, and once again, people are getting out of bed for this lower high. So, technically speaking, I know this is not what people want to hear, but in order to break the market structure on the daily time frame, you would have to move above 32,500. There is absolutely no target that we would, there is absolutely no other target that is even really too relevant at this point in time. If you do not break above 32,500, say for example, I know myself personally, I don't think we're going to go this high, but let's say we go up to like 31,000 and start to move back down. This would still, once again, be a lower high, and we would probably be coming back down to put a lower low within this market structure. Now, another very key area which we would definitely need to push above if you did want to be bullish would be the past FOMC meeting date price. Now, we pumped up onto the FOMC on the 15th, and just like we predicted when we were talking about the FOMC, we were going to slide down on the 16th, and that's exactly what we did. So 22,850. This is probably the most important short-term target because, for example, myself, I might get out of bed temporarily to make some, short-term positions in the market if we do move up above 22,850. But, can you imagine if we come up to 22,850, we backtest the FOMC meeting date price, and then we just start moving back down to the downside? This would be another lower high of about 30%, which, once again, I think this this tweet that I reshared over on my Twitter calls it perfectly. You can see all-time high, capitulation, people get out of bed for a small move, people get out of bed for a small move, and again, and again, and again. It just happens cycle over cycle over cycle. We have these, cyclical drops, we have these cyclical bounces, and it happens again, and again, and again, and again. And I'm a very conservative trader. I like to, look at trends, use mathematical indicators, but a lot of people trade on emotion and, do get out of bed for these smaller time frame moves, but I really don't see anything to be getting out of bed for at this moment in time. daily time frame, the squeeze bomb is still definitely holding in favor of the bears. Now, lower time frames, you know, we are kind of coming into these 4-hourly EMAs, and Bitcoin has proved a few times that the 4-hourly EMAs are not necessarily the best indicator to use. For example, the 4-hour EMAs almost perfectly works on cryptocurrencies like Solana, but a lot of the time, you know, on the BTC 4-hourly chart, you'll actually see this flip bullish. I mean, this had 2 fake outs, and this literally flipped bullish the moment, like literally within a couple of days, we were boom, all the way back down to the downside. And I would also like to highlight, you know, we are just setting up these super nasty bear flags. And we've once again had this mass capitulation, and this is why I think, you know, we're obviously not going to go down in a straight line, but we are pretty much having these straight poles back down to the downside, and we're having these nice relief rallies back up. And this, once again, this is what people get out of bed for before we do initiate the next move to the downside. So right off the bat, this chart, very important that we do take out 22,800 before, in my opinion, I even consider, you know, making leverage long trades, and that would be in the short term, because like I said, until you do come up to the top here and take out 32,400, nothing would have changed. Now, if we do look at the fear and greed index, very interestingly, we were sitting at 6 for the past couple of days, and we've recently moved up to 9. So, you know, it's very evident that we're still sitting in extreme fear, and the market structure has not changed. I mean, if we look at the fear and greed, it's basically the Bitcoin price. You can see we've just been massively capitulating since the all-time high. So, you know, this market structure that we've got going on right now for the fear and greed index is once again still very bearish, and I do not think the bottom would necessarily be in at this moment in time. I would also like to highlight, when we do get into this structure where we are putting in these extremely, you know, dark red dots over on the fear and greed index, it is normally always around the bottom phase. So, you know, I would like to emphasize, because, you know, there might be people who are new to my channel. If you are, warm welcome. I'm not, you know, a permabear. I really don't think we're going down too much further. My personal price target is 16,500. So right off the bat, you know, I'm not calling for like a major capitulation. I'm not calling for, you know, 10,000, 12,000, 14,000. I think we're going to have a move down to 16.5, and then I think we're going to have a big relief rally back up. I think we're going to have a massive move back down, and it's going to be a higher low, and that is when we can finally be confident that the market structure has changed. Now, talking about changes in market structure, I would actually like to show you what's going on with the total crypto market cap, because it does seem like, even though Bitcoin is bearish, the crypto market, it doesn't really care. I mean, as you can see, you know, we've got a low down here, we've got a higher high, higher low, higher high, higher low, higher high, and in my opinion, it looks like we're coming down to form another higher low before we do move back down, before we do move back up to the upside. There's only one thing wrong with this chart though, it's on the inverse scale. So, you know, once again, if you did agree with me with that analysis that we are in a higher high and higher low trajectory, then you should agree with me when we snap back to reality that the market structure is completely unchanged. And on the daily time frame for the total crypto market cap, we've done nothing but make, you know, high, lower low, lower high, lower low, lower high, lower low, and another lower high. But the only difference is with this bounce is at this moment in time, we haven't even managed to have a fake out above the 13 EMA. We haven't even managed to come into the EMA ribbons yet. And subsequently, you know, once again, I wouldn't be surprised if we do continue with this bounce for another short period in time before we do start to push back down to the downside. But with that being said, as you can tell, I mean, we're not even up to this level yet. So I think it'd be very interesting if the total crypto market cap could move back up to 1 trillion. If it knocked on the door of 1 trillion and then, you know, the door gets slammed in its face, then this would probably be the point in time where we do start to capitulate. And this is when I want to talk about the macro structure that we do have going on the total crypto market cap. Now, what you'll notice at this moment in time is, if I clear this up, let me get rid of these data points so it's very simple and clear what is going on at this moment in time. So let me delete these, And if we head back over to the weekly, what you'll see is from our Fibonacci, from our low to the high, we've put a horizontal ray over the 786 Fibonacci. We've come back down to the 786 and we've had a nice bounce. This should be a bullish indicator, right? Because, you know, basic Fibonacci theory, you draw your fib from the low to the high. If we stay above the 618, great. That means the market structure is very, very bullish. If we stay above the 786, it's kind of like a, you know, sometimes maybe good, sometimes maybe shit. It's okay, you know, it's really nothing special, but you can come down to the 786, have a bounce, and then you can resume with bullish market structure. But we should look at previous trends to help us decide, is this what we are going to be doing in this market cycle? Now, if we look at what the total crypto market cap did in 2018, you can see the total crypto market cap actually topped in June of 2019, which is interesting. What you'll notice is it had this massive run up, bang, came all the way down, and this is where we came down to the 786 Fibonacci, and we subsequently printed a pretty large bounce for the total crypto market cap. But what did we do? We subsequently, a couple of months later, slipped right back down, and we had that one last capitulation before the bottom was in. And this is another one of these reasons to back up my points on why I'm saying, you know, I do not believe that Bitcoin is starting a bear market now. I do not believe that there's, you know, going to be macro capitulation after macro capitulation after macro capitulation. I think we're sitting in the last of the move. And I've talked about this before. If we look at my Elliott wave structure, if I head over to the weekly time frame, I really only want to spend like 20 seconds on this, but you can see, you know, basic Elliott wave structure. I'm not going to talk about our last run up, but you can see classic ABC correction into the bear market. You've had your 1 wave impulse, you've had your 3 wave impulse, and you've had your 5 wave impulse, and we are in the macro ABC correction, just like we see in every bear market. Now, within these last moves, because when you move back down to your ABC correction, your A and your C contain 5 microwaves, and we've already had, you know, your 1, 2, 3, 4, 5 ABC correction, 1, 2, 3, 4, and this is why I'm saying, you know, I do think we are in this last leg to the downside. There are many charts which categorically state that we are getting ready for the final capitulation, and, you know, I've got this drawn down here to 14,000. This is really kind of just drawn to the next level down over on the chart, but nonetheless, this is where I think we're going to be dropping down to at 16,500, which is where the 300 week moving average is. If we look at the BTC USD chart and we come over to the 300 week, the 300 week has started to move up. We are currently sitting at 16,600. Now I'm going to move over to this chart in just one moment's time. We've talked about the fear and greed. We've talked about, you know, the memes over on Twitter. We've talked about the Elliott wave theory. We've talked about the lower high from the FOMC meeting. I'd like to quickly highlight we have 35 days until the next FOMC countdown. This is going to be coming into fruition on the 27th of July. And once again, the Chicago Mercantile Exchange are calling for another 100% likelihood of an interest rate hike. Now, I previously mentioned this before because these guys do have pretty good predictions. They almost always hit the nail on the head. And, you know, I was looking at this before the previous FOMC meeting, and, you know, once again, they had 100% likelihood. It happened. They called it. And I still do think that they are going to call it this market or this FOMC meeting. And I do think the Fed are subsequently going to continue to increase the interest rates. Now, there's one more thing I do want to share over on my Twitter. And that is this. If we look at the ECB balance sheet, this has just hit new all-time highs. So, you know, with this, the Fed just keeps on printing. They keep on increasing their balance sheet, but subsequently they're increasing the interest rate. So, you know, what does that mean if you're a normie? It basically means, you know, the Fed is non-stop printing. They are giving themselves free money. They're using that free money to expand their balance sheet. And how do they counter that inflation? They're raising the interest rate. So this means normal people like me, normal people like you who are watching this video, we're the ones who have increases in, you know, how much our bills are. For example, the CPI, the Consumer Price Index, shot up to 8.6%. And this just means from the last year, if you were to walk into your regular shop wherever you live in the US, if you went in to buy X amount of groceries, this year it now costs 8.6% more, and your wages have probably not increased that much, so subsequently all of this inflation is bleeding into, you know, retail traders and the average Joe, and subsequently there's less money in the markets right now. And this is very clearly displayed by how the stock market is reacting. I mean, we're seeing money flow out of the stock market like there's no tomorrow, and this is because interest rates are getting absolutely bombarded to the upside. The total as well, which is the total crypto market cap, is also getting bombarded to the downside. So what is one other interesting thing to notice when we are talking about Bitcoin and the stock market? Now, once again, I would just like to very quickly highlight, when we do look at the total altcoin market cap, first market cycle back in 2018 over here when we had our big bull run, we did not hold the 786 Fibonacci. Coming over to the next, you know, you can call this a bull run, it's kind of debatable, but nonetheless we had a massive increase over on the total crypto market cap, and you know, this massive macro run up did not hold the 786 Fibonacci. We capitulated below it before the next move, and you can go back into further market cycles and you find this to be true with all of the market cycles, but nonetheless I'll leave that to you if you do want to do that. So if we look at the dollar and if we look at the stock market, very similar things going on here. They almost look like the same chart. If you inverted the dollar so it was moving to the downside and you looked at the SPY, you can also see that this is very similar. So, you know, a while ago we called for this diamond top over on the stock market, and we've been absolutely getting wrecked ever since. And just like the crypto markets, what you'll notice is you've got your highs, you've got your lower highs, lower highs, lower highs, lower highs, and you know, once again, this is the bounce that people are getting out of bed for. You know, we've moved up 4% on the stock market since the lows, and you know what, this is what the altcoin holders are throwing themselves out of bed to. They're running to the door to buy their altcoins, which they currently deem cheap, but like I've been saying, you know, I've been here since 2018 and the market structure is exactly unchanged. The sentiment in the market right now is basically what it was like in the final capitulation, and I tweeted this over on Twitter as kind of a meme, but it's also very serious. I do not believe the bottom is in until, you know, the normal persons, the average Joes, are in crippling debt and they can no longer buy the altcoin dip. That is when the bottom is in, because that is when the smart money comes and takes advantage of those cheap prices. Notice how I emphasize cheap at that moment in time, because that is when crypto is cheap. The crypto is cheap when the total crypto market cap capitulates below the 786 Fibonacci. Altcoins are cheap when altcoins capitulate below the 786 Fibonacci of the total crypto market cap, and we're not there yet. We've been bouncing on it, but we haven't had that capitulation. As you can see, you know, this is nothing new. This is not the altcoin's first rodeo when it comes to taking out the floorboards and going down, taking out the 786, and this is why I'm thinking, you know, once again, this is another reason we are sitting at that 786 fib at this very moment in time. And when we were lollygagging into the 786 fib the last time, coming back into the 2018 bear market, what did we have until the bottom is in? We had one final flush out and then the bottom is in. So I really do just, you know, obviously people do what you want with your own money. I'm just telling you what my trading plan is, but I really do think one last capitulation is going to be coming before the bottom is in, and I definitely do plan on taking advantage of what I actually deem to be cheap prices, because right now altcoins are not cheap. You know, people have been saying over on Twitter, over on YouTube, that altcoins are cheap for the past 6 months, and you know, if you go look back at when they were saying altcoins are cheap a couple of months ago, when you look back to what they were saying 6 months ago, look at the US dollar values of all of those altcoins. Those were not cheap altcoins. Just like at this moment in time, we still do not have cheap altcoins. So one other metric that I would like to talk about, because we looked at the stock market, we talked about the fact that at this moment in time we're making lower lows and lower highs throughout the board on the stock market. On the dollar, it's basically the inverse. You can see this is a very bullish chart pattern playing out over on the stock market right now. Now, you can argue, you know, yes, this would just be your run-of-the-mill bull flag, and, you know, subsequently this does look very good in of itself. You can even see the bull flag, or the price action rather, within the bull flag has come down to the 13 EMA, and it looks like it wants to push back to the upside, but this is not the chart pattern that I want to talk about. I want to talk about this massive cup and handle pattern that is literally playing out right in front of our eyes. And if the dollar does take one last leg to the upside, you can potentially see, if we look at our Fibonacci's, because, you know, once again, we came up, we made a local high that we have not seen in like 20 years. We haven't seen these price targets. Let me just make sure I'm not meaning to say 10 years, because we have to zoom out a while. No, 2002, I was right, 20 years. The dollar has not been this strong in 20 years. The dollar came up quite recently, broke up above its local high that it set in around the 13th of May. We made a new all-time high, and since then, you know, we popped up from the all-time high, we've been bull flagging out, and once again, if we head over to our other DXY chart so you can see it a lot clearer, this is a textbook cup and handle pattern, and this does look super bullish. This looks 100% valid as well. Let's see, I was going to draw a horizontal ray on it, but I want to get the approximate price target from this. And let's see where this plans out to first, because I wouldn't necessarily... No, this almost perfectly lines up with my price targets that I've got on the dollar. So, you know, this cup and handle pattern would be taking us up to 108, whereas my personal Fibonacci target... Let's see what we've got here, because we had another fib over on the board. Let's just draw from... the 2.618 up at 111, but more importantly, I think that 110 is going to be a mass psychological level for the dollar. So we could see, and once again, this is what I mean by the final capitulation, we could see one last macro bullish move up for the dollar, and then, you know, at this point in time, the dollar would be way extended, and it would probably start to crash back down. And this is when I think that it is the right time to pick up some altcoins. I think that's the right time to pick up some Bitcoin. You know, I've been keeping the same energy for the past couple of months, and yes, you know, I've been making these similar videos every 2 or 3 weeks or so, and just like I tweeted over here, once again, to show you the same thing, what happens is we come down 20%, and then we come up like 9%, 10%, and, you know, people celebrate the 9% move, but, you know, it is just another dip after the dip after the dip after the dip after the dip. And when you do zoom out on this market structure, you can very much tell that we are still in that lower high trajectory. So stock market is heading down, as I'm expecting the dollar to keep on heading up and the stock market to keep heading down. How will this affect Bitcoin? Well, one easy way we can do this is we can quantify the BTC USD price divided by the SPY. So this is simply telling you how many units of the SPY can you buy with Bitcoin. So, you know, at this moment in time, if we look over on the y-axis on the right side of the screen, you'll notice this is currently popping in at a value of approximately 55.2. What does this mean? This simply means that at this moment in time, one Bitcoin can buy you 55 odd units of the SPY stock market. And this makes sense because if we look at the SPY, the price is currently sitting around 375. You times that by 55 and boom, just like clockwork, you get the Bitcoin price. Now, why would we want to know how Bitcoin is performing against the SPY? And almost, you know, this looks like the BTC USD price, apart from the fact that we've massively capitulated a lot further than we have over on the BTC USD price already. Well, one important thing that this chart does tell us is at this moment in time, when Bitcoin is in bearish phases, it goes down against the SPY, meaning that, you know, if we look at the SPY, we can also see that the SPY is heading down at this moment in time. It's very clear that the SPY is having a massive move back down to approximately 350 before I expect that we would see any type of bounce. But what's important to know is that Bitcoin is underperforming the stock market. So let's say the SPY continues its descent. Let's say the SPY heads down. And by the way, this is where I think we're going to be stopping off on the SPY, which I really don't think is too bearish. I'm predicting about another 15 to 16% flush out to the downside before the market cycle lows are at least within the monthly time frame. And why do I think we're coming down to the 300 week? Well, if we look back at what happened in basically every bear market and every bearish market structure, I mean, specifically, we can look at this pandemic event in March of 2020, we capitulated much lower than the 300 week. You know, we had a massive move to the downside all the way below the 300 week. And you know what happened in March of 2020, definitely up for debate, but in my opinion, it wouldn't be up for debate. What we're witnessing at this moment in time is 10 times more bearish for the markets than what we saw back here. And subsequently, you can see we've only come down 25% so far, whereas the SPY or the S&P 500, you know, a lot of people might be new to my channel. The SPY is simply the S&P 500. Nonetheless, this came down 35-36% in the pandemic scare. This was very short-lived, very quick, and then we were out of here. This is, you know, a much slower drop, and subsequently we're subject to these higher price volatility swings to the upside. So when we had the Black Swan event, it was pretty much just boom, now the bottom is in, let's go to the moon. But at this moment in time, it's kind of like boom, and then it's like, oh, is the moon coming back? No, we're going to zero. Oh, is the moon coming back? No, we're going to zero. You know, is the moon coming back? No, we're going to zero. And it just happens again and again and again. And I have no doubt that I'll probably be making a video similar to this in the next 3 to 4 weeks, once we go down another 25%, and then we poke our heads up 5%, and people saying, is the bottom now in? But once again, my friends, the SPY cycle over cycle tends to like to capitulate down to the 300 week in these super bearish markets. Now, in the last major recession we had, this was back in 2008, and I really don't think this is up for debate either. I do believe that we are in a recession. If you look at the prices of things like oil, they are back at their 2008 recession levels. You know, you look at the stock market, you look at the dollar's been its strongest in 20 years. The stock market is bleeding out heavily right now. Bitcoin's having its, you know, it's breaking market structure. It's breaking below its previous all-time high, which is just something we've not done before. This is very evident to me that we are in a completely different cycle due to the geopolitical and geo-economic news that is currently finding its way around the market. I mean, once again, I'll say it again, but I was here in the 2018 bear market, and if you're surviving through this bear market, you are surviving through a bear market that is a lot worse than 2018. 2018 was pretty quick, we were done with it and we were out of there, and nonetheless, you know, there was a lot of bearish stuff going on, mainly FUD, but the markets were not acting as they were at this moment in time. And you look back at these crazy events and we do come back to the 300 week, or we at least come back to the 200 week. Like every single time we have these big cascades, we always come down to the 200 week. So let's say I'm wrong. Let's say we're not going to come down to the 300 week. Looking at market structures on these big dips, you know, the 2016 drop, 2018 bear market that also correlated over to Bitcoin, we look at the pandemic scare, these all capitulated to / below the 200 week moving average. So, you know, once again, the market structure that we're in at this moment in time is so much more bearish than what we were witnessing back then. So I really don't think it's up for debate. I think it's pretty obvious that we're coming back down to the to this orange line here, which once again is the 200 week. Now, if the stock market is likely to fall another 6%, what does this mean for Bitcoin? Well, we can look at how Bitcoin performs against the stock market, and we know that when the stock market drops, the Bitcoin massively capitulates against the SPY, and this could definitely take us down to the 300 week, knock us down another 10% or so, take us down another peg. And on the BTC USD price, I think this is where we start to find our bullish bottoming structure around 16,500. Which once again, I did give you the price target for that. That is because that's where the 300 week is. Now, my least bearish price target at this moment in time is the previous CME gap. If we look back on the daily time frame, you can see 11th of December 2020, 18,500. And once again, I feel like this is another thing that's not up for debate. Obviously, you know, I don't have a crystal ball. Nothing is set in stone, especially when it comes to these crypto markets. But I really don't think that we are out of the water yet. And I do think in the most conservative estimate that Bitcoin would be coming down another 10.69%. You can already look at what is happening on the daily time frame for Bitcoin, and we've got another one of these massive wicks to the upside. If I find a relatively clean chart for you over on Bitcoin, before we do wrap up this video, if I clear up all the drawings, you know, every single time we do this, every single time we have these big wicks to the upside, you can see this was a relatively big wick to the upside. This was an okay wick to the upside. This was, you know, this was a pretty big wick to the upside. This was a pretty big wick to the upside. And this was a pretty big wick to the upside. What do they always have in common? It shows that bulls are running out of momentum, and subsequently bears are stepping back in to push the price down. What normally happens after you get these big wicks to the upside is the bears start to take over the trend. It's basically like the bears pushing the bulls and realizing, you know, this guy's all talk, you know, he doesn't have any steam left, and then they start pushing you down the hill, and this is when you get this big capitulation. This one was, you know, a very quick-lived capitulation. We moved down 22%, had a dead cat bounce, lower high, like I said, as of the name of the video. And what did we do? We started to move back down in terms of the market structure. So once again, keeping this very simple. I think if you even want to get out of bed in the next couple of days or so, you would need to be getting out of bed because we would be taking out 22,750. If we do not even get above 22,750, then I will be napping like a baby in my bed, knowing that this is once again another lower high in this market structure. And once again, this is for the lower time frames. To actually break the market structure on the daily time frame, you would need to do this. You would need to break above 32,500. You'd need to come down, you know, probably into these EMA ribbons, and you'd need to back test them at, you know, 27,000 or so, and then start to push up, and then you would have this, you would start to have, you know, your low, higher low structure until something like this happens. Then I do not think the bottom is in. But once again, you know, nothing has changed in the past couple of days. Nothing's changed in the past week. The Fed is still very hawkish. They're still increasing the interest rates. They're still increasing inflation. The interest rates paired with the inflation means that normies like me and you are going to be the ones bearing the brunt of inflation, and subsequently we're going to find that our real wages are less. The amount of groceries that we can buy at a store is going down, and subsequently, you know, the normal person just does not have as much money as they did to go all in on NFTs of apes and other stuff like that. So, you know, once again, this is basically all I've got for you today. I did just want to give you a quick update. Well, I say quick update, this was probably one of my longer videos. But once again, in my opinion, the bottom's not in. We're getting ready for that final capitulation. Yes, some of the alts have had a very nice bounce, but I do think it is time that we are going to start snapping back to reality. And I would also like to show you, you know, Bitcoin against the stock market, the week commencing, let's see what this was. So I mean, this week really from yesterday, and also even if we look at Bitcoin on the weekly time frame, you know, this is once again what people are getting out of bed for. This looks exactly like what we saw here. You've got this big wick to the upside, and it very much shows that there's a lot of weakness in the market right now. That's all I've got for Bitcoin. I hope you enjoyed today's video. Bitcoin the lower high, and as always, cowboy out. Peace.